Hello traders, Gary Wagner here. Just after 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, April the 10th, 2018, and this is the Daily Report for gold and silver. Gold closing today at 1343.10, which is off of the highs, but still showing a higher high as well as a higher low on our daily charts. Silver declining by about 3 cents at 16.56, and that's all in light of the weaker US dollar. 89.33, down 20 points. Tremendous upside move in U.S. equities. Dow gaining 428 points, closing at 24,408. And a fractional upside move in Bitcoin futures, 67.10 and 68.35 in the CBOE and CME exchanges. Traders, now for the third consecutive day in a row, we do have gold prices closing higher, and over the last 3 days we have had a consistency in that each consecutive day has contained a higher low as well as a higher high. At the same time, although we've seen this higher low and higher high over the last 3 days, if we look at candle body size, we've seen a contraction of range. At the same time, it is my current belief that the best is yet to come, and that is based upon some technical studies of both gold and silver, looking at a much more long-term aspect of the market in which we can see a compression of current range. We do that by taking a look at the recent lows in the market that came in since the middle of March, as well as the recent highs from that same time period. And as you can see, the range itself has been going through a compression cycle. A compression triangle is going to typically have a major release of energy once price action approaches the apex of that triangle. And although it can spike either higher or lower, typically the market returns to the most prevalent trend direction. And when we look at a more long-term prevalent trend direction, we really have to take a look at the rally from December through January and say that the break that we should see once we reach the apex is a major price ascent in gold. At the same time, when we look at the last 3 trading days of the dollar, we can also see the reciprocal and opposite pattern occurring. Has been a series of lower highs, a series of lower lows, with the dollar index closing below its opening price as indicated by a red candle. The key difference when we look at the dollar compared to gold is, although both one is traded lower and the other is traded higher, is really in body size, because the body size of each day in the dollar index has been about the same. We haven't seen any kind of narrowing of range. And the other thing that I find most interesting is that we can see a solid compression triangle within this market. Traders, I've converted our daily chart into a weekly chart to better illustrate that point. The compression triangle that we're looking at is currently occurring and has been prevalent since the last quarter of 2017. The last time we have seen such a strong compression triangle actually occurred in 2015 through 2016, and that is when gold prices came to their absolute bottom or low. And when we look at the dollar index, we can see that this protracted compression triangle resulted in a tremendous upside spike in dollar value here. That was obviously the most prevalent trend direction. And at the same time, once we hit these tops here and selling ensued, we can see that this current compression triangle, once it reaches the apex, will most likely return to the most prevalent trend direction. In other words, break and break solidly lower. If in fact we break below 88.58, which I believe to be an absolutely critical price point for support, the next real level of support would not come in till about 84.50. And traders, that is about a 4% drop in dollar value. In other words, I believe that this next rally in gold could be A, an extended rally, and B, it could be a rally that finally breaks the ceiling that exists at 1365. And in fact, those shorter term studies agree completely with these longer term studies we looked at about a week ago, in which we identified an extremely well-defined long-term multi-year trend developing in the precious yellow metal. We are looking for an entry point currently to enter a long trade, and we've not seen any kind of dips in the market. Therefore, what I'm looking at is as follows. Gold prices are currently trading at $13.43, and our next real resistance area comes in at a 23% retracement at $13.45. If in fact the market moves to this point and bounces off of this point, we will buy on the dip in this area. However, if we get a solid break above $13.45 on a closing basis, we will buy the breakout. If in fact gold does have a major upside breakout, we could see silver finally exit this sideways trading pattern that has been so prevalent throughout the entire year, as we saw this market move from 1770 down to these lows at about 1625. Again, the key to me is breaking above the series of tops in the market and having the price point be above its 50-day moving average. And traders, lastly, I do want to take a quick look at Bitcoin and Bitcoin futures. A modest uptick today, up about $160, 68.35. The pattern that it creates is simply called a bullish harami, which is also called an inside trading day to the Western technician. For this pattern to have any strength whatsoever, it requires a confirming candle. Of course, a confirming candle for this bullish reversal pattern would have to be that tomorrow's trading activity was a green candle. In other words, it closes higher than its open with a higher high and a higher low than the previous candle. Traders, the topic of today's show was the compression triangles that we identified in both the dollar as well as gold. It is our belief that once the price point in the dollar and gold reach the apex, we should have a release of energy. We are expecting gold to break to the upside and dollar to the downside. 88.58 is a critical point that if the dollar index breaks below, we could see a decline of almost 4%. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.